Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining space. Joining me today is John Feneck of Feneck Consulting. John, welcome back to Kitco.
Thanks, Paul. Good to be here.
We've got an interesting suite of things to discuss today, and we're going to start with penetrators. And I'm not talking about the Puff Daddy trial either, but war between Israel and Iran, which of course means lots of missiles. And what's on the end of those missiles? Tungsten. And tungsten developer and friend of the show, Almonty Industries, their share price is up 45% over the past month, and the company is in the process of listing on the New York Stock Exchange. John, you follow the critical minerals such as antimony and tungsten very closely. What is going on in that space at the moment?
Yeah, and kudos to you for interviewing Lewis back in, I guess, February from Almonty, because that was a reasonable price, and now the stock has gone up exponentially from there. We didn't buy Almonty because of the South Korean jurisdictional situation, right? I just have a problem with certain parts of the world. As of last year, as I told you, Paul, we have been focused heavily on U.S. Or North American assets as early as that debate, if you will, with Trump and Biden back in June of 2024. But that said, I mean, let's look at tungsten. Tungsten is an asset or a commodity that is very misunderstood. There is no supply. Like 81% of tungsten is produced in China. If you look at what happened back in Q1, China stepped up and said, hey, we're just going to, they didn't say we're going to ban all exports, but you know this is the way it's going. I mean, if this keeps up with Trump and China, this is going to happen. So now Trump sent out that executive order in March and then followed it up with a mid-April kind of doubling down, if you will, on the critical minerals like tungsten and antimony to say, where do we have production capabilities in the U.S., right? For us, Guardian Metal, GNTLF, right in Nevada, has been our biggest holding in the space. It's been phenomenal. We got in 15, 16, 17 US. It's trading at 80 cents US right now. I mean, it's been a lights out name for us. I think they're going to get a DOD check. I mean, I don't know how they're not going to get a DOD check. They're in the best jurisdiction in the world in Nevada with 2 projects, not 1. And so, as a portfolio manager, Paul, we have to kind of decide, do we take the jurisdictional risk with Almonty or do we go right here a state over from where I live, right? I mean, it's a lot easier investment, if you will. American Tungsten was another one that we still have a position on that just did a financing literally a couple of days ago and really has depressed the share price. So there's still a lot of value out there because, as you know, Paul, a lot of these juniors just continually have to raise money no matter if they're in the right part of the commodities world or not.
Now, the critical minerals aspect or narrative, particularly as it relates to defense applications, been around for a number of years, obviously, but it does seem to be coming really, really to a head with Israel launching missiles at Iran, Iran launching missiles at Israel, the US getting involved there as well, dropping some big bombs on Iran. And more recently, in recent days, I've been reading that the US Army, in part of its aid package or military aid package to Ukraine, it's stopping the export of certain munitions because it doesn't want to run out. That to me talks of supply chain problems, logistic problems, i.e. the US is perhaps concerned that it can't get the critical minerals it needs to put on and in its missiles, and so it wants to keep its arsenal for itself.
Yeah, that's very astute of you to read it that way because we're in trouble as a country when it comes to supply. There is no supply, like I said. So we have to start onboarding things quickly, more quickly than we are. I just interviewed Nova Minerals, NVA. Chris told me he's been dealing with the DOD for 18 plus months right now as an antimony play in Alaska. Give me a break, right? It's like these guys have the minerals in the state. It's a mining friendly state and they can't get it done. And it's just very frustrating to hear these kind of stories, even though we're seeing progress, right? Like Trump has done a tremendous job of making progress in our sector, and it's really caused a lot of these stocks to take off this year. But we're still looking, Paul, for things that are undervalued that could produce tungsten down the road, like Triumph Gold. I don't know if you had time to spend with John Anderson at the conference we did back together in May, but TIGCF in the States, TIG in Canada, they have tungsten on their property in Canada, right? But like a guy like that has been very judicious with the shareholders' equity, if you will, in that he mothballed the project for the last 3 years because he said, why am I going to drill an asset when I get no love for it, right? And it makes perfectly good sense to me. I wish more CEOs would think in those terms as opposed to drill in markets like 2022, 2023 when no one really cared, right? Unless you're like a Snowline or someone that was killing it. The markets really didn't reward you, if you will. But now Triumph is something that I'm buying. They just bought another project in Utah. Okay, so now they're going from just Canada to Utah, and they bought a silver project. I mean, for 150 grand, by the way. It's like there's so many values in this space. As I sit here, like I don't lose any sleep at night thinking about my portfolio like I did a few years ago.
John, our conversation so far has been looking at critical metals from a weapons perspective, but the precious metal gold is also increasingly spoken of in the context of a critical mineral, more in terms of obviously geopolitics. Gold M&A continues with China's Zijin Mining to buy RG Gold's Regularok gold mine in Kazakhstan for 1.2 billion US dollars, with plans to expand production capacity. The mine produced about 193,000 ounces last year. Zijin continues on its tear of buying gold assets. The deal will make it a clear world's number 5 producer based on total production. John, is it surprised to see a Chinese company buying gold production?
Not at all. I mean, Zijin's done a great job over the last couple of years and just growing through acquisition. And I mean, look at what's happened with the gold price. They've been very astute getting that done. But look, I feel like you're going to see a ton of M&A activity in gold stocks over the next 2 years or so, with gold staying stubbornly high here. So.
Now, but what about the geopolitical aspects? The gold narrative in the past year or so has been heavily on, central banks buying more gold in different countries. China's one of those. China is strategically elusive about how much gold it actually has on its reserves. It's made it very clear it wants to move away from the US dollar. It's made it very clear it wants to be able to transact in its own currency, not just the US dollar, and perhaps even settle stuff in gold as well. Gold seems to be a very critical or strategic asset for China.
Absolutely. And we haven't talked in a while about the BRICS, but every August, I think it is, right? Isn't it August that the BRICS meets? And that stands for Brazil, Russia, India, China, South Africa. That coalition is attracting a lot of attention. The fact is they're going to start their own currency at some point, whether it's next year or down the road. And what do you think that's going to be backed by? I mean, gold is going to be a part of that backing for sure. I mean, look at how much is being accumulated by those countries, right?
Absolutely. I saw a really, really good webinar yesterday called Gold Makes the Rules, or Who Has Gold Makes the Rules. And that featured Ned Leyland of Jupiter Asset Management. And he was talking very heavily about US President Donald Trump's affinity for gold, which he said is featured in Trump brand hotels and 20 other of his endeavors, including, of course, his Gold Dome or Golden Dome missile defense system. It does seem that President Trump is shaping up for gold to become a much more important or significant aspect of his economic policy going forward.
I would absolutely agree with that. I can't say again. I'm just to say again. I mean, we're in a period of time now where the U.S. is doing something it hasn't done before, which is really care about things. The question is it too late? And the answer to that is probably. In a lot of cases, you can't just turn on production, right? Like you can't. If you need more copper, it takes 5 to 7 years to get things through. I mean, it's like. Even if you're close to production, right? Like the permitting process. Let's look at Mexico, for example. It's like Mexico's permitting process has been an absolute nightmare for mining companies. I mean, you had AMLO, then Scheinbaum comes in October 1st of last year. She is pretty slow. I just talked to a company, Sonoro Gold, SMOFF, just last week because they put out a piece saying You probably saw that news, Paul, about Mexico saying no new concessions. Well, Sonora's already got their concessions. They don't need any more concessions. And the stock's gone down 35% in sympathy with companies that do need the concessions, right? So as a value manager, you say, how is this even possible with gold over 3,000 that I get a buying opportunity on a stock like Sonora where nothing's wrong? That's where doing the work really matters, right? Picking up the phone, talking to chairmen, talking to CEOs, even CFOs, just the GOs that work at these companies, getting an idea of what you own is really important. But in this case, it's like a gift. It's like gold isn't going down at all. It's been holding 3,000 an ounce unbelievably well. And so at what point do you just say, I need more gold equity exposure? I think the world is going to start saying that as a result of what's happening with Trump and other leaders throughout the world that are really putting it on their radar now.
Okay, we'll be talking, Canada and the US are both taking steps to accelerate permitting, and we'll be talking about one project that's potentially benefiting from that in just a moment. But before we do, the government of Mali is to reopen Barrick Mining's 723,000 ounce a year Lologonkoto mine with a court-appointed administrator. The mine has been closed since earlier this year due to a dispute between Barrick and the government. Barrick has dug in its heels during government negotiations where other Western gold producers in Mali have cut deals. John, how do you think this plays out? Does Barrick lose its asset? Does it cut a deal? Does it enjoy a nice surge to Washington and the ICSID, the International Center of Investment Dispute Settlement, or something else?
Yeah, that's a great question. I mean, Barrick has a new ticker, as you and I talked about the last time we recorded. They dropped to GOLD and went to B, as in boy. When you look at a large stock like that, Paul, it's important to look at all of the components, right? Mali is one piece of the pie there. And so it's much less important for a Barrick to get that right. Like when you're BTG, which is B2 Gold, it's more important because Mali and Fekola mine was a much bigger part of their growth strategy, right? So that stock has still been depressed as a result of what's happening in Mali. But yeah, I mean, Clive Johnson at B2 Gold knows what he's doing in Mali. So does Barrick, and yet this is still happening, right? So like, I really don't. We own both those stocks, but in small percentages because I don't want to take the jurisdictional risk. It's still like, why with what we just said, right? With Trump being more supportive in the U.S., why not do more business here than worry about what's happening somewhere like that, where you can wake up one morning and your whole thesis changes because the government's crazy.
700,000 ounces, that's, very roughly sort of 20% of Barrick's production. So that's quite a significant thing. Let's talk about sector leader Newmont. It's undertaken a similar growth strategy to Zijin Mining in recent years with a lot of acquisitions for growth. To what extent or not, John, do you think Barrick mining investors would have liked to have seen something similar given what they're faced with today?
Yeah, absolutely. I mean, I have a lot more Newmont on the books than I have Barrick, thankfully. And I have even more Agnico than Newmont. So, this is still a rifle approach market, Paul. This is not a shotgun approach yet. We're getting much closer to that, where we had, a 2016 spring and summer where you could just buy a lot of the names we're talking about here in mass and do very well. 2020, following COVID, same kind of rally, right? This one's been weird. It's like you have to really do the homework. If you draw a chart of AEM, Agnico, on B, Barrick, it looks completely different. So we have a 2% weight on Agnico and a 0.2% weight on Barrick, right? It's like, there's a reason. It's because the chart's telling you to do something about your holdings. And this is a concept we talk to clients about all the time, as you know. We say, look, if you have a limited pool of capital, you have to make the best of it. And opportunity cost is important. So you have to be able to rotate out of things that are not working as well even. Maybe they're working, but not as well as you'd hope. And then put that capital into something that will work down the road or is working currently.
I think another wrinkle to that, John, is the timing aspect as well, because you can identify a good company with a good project, but having a keen understanding of what the timelines to key catalysts are mean that you could be, sitting around doing nothing, sitting on your hands for a number of months before you get that catalyst. So, as you suggest, sort of continually looking at the sector and comparing one opportunity with another, what potentially is going to move before the other is a key part of the process at the moment.
Yeah, it's a great point. And we don't mind waiting, Paul. Like our average hold is 1 to 3 years. So we want to get that long term capital gain and wait a year plus to sell something, generally speaking. I mean, there is some stuff like uh, this. I won't even mention this gold stock, but it's gone from, 4 cents in December to 29 cents today. And I can't see any reason why I wouldn't sell it here when I look at their news flow, right? There's something weird happening. But that could be some newsletter writer that's just pumping it, right? You never know in our sector because these things are so thinly traded. So you have to just look at that and say, hey, I'm up hundreds of percent. Why wouldn't I take the gains off the table here, wait 30 days, avoid the wash sale rule, and rebuy it if I'm wrong, right?
Absolutely. Now, another company that's active in the M&A space in the gold sector is Torex Gold Mines. It's been tipped by many as a takeover target for bigger companies, but it's deploying its own capital to boost its own pipeline and to perhaps create a more defensive position as well as improve its growth profile. The company's announced it's going to buy Mexican gold explorer Reina Silver for 26 million US dollars to add to its pipeline in Mexico. John, it does make sense for Torex to build out its potential future pipeline in Mexico. Mexico, of course, is where it produces more than 400,000 ounces of gold. And bearing in mind your comment earlier about the difficulty of getting new exploration concessions, buying them from somebody else seems to be a good strategy.
Yeah, and the Reina price, if you know that story, it's been very disappointing. I mean, Reina Silver and Reina Gold merged, but if you look at them individually pre-merger, not too many people in my circle have made money there. So, you know, is $26 million a good deal? I don't know. I mean, in a hot gold market, probably. It's just not something we owned. We don't own either of those stocks.
Now, John, do you think people still expect or want Torex to do a bigger transaction to lever the strong cash flows they're getting from that 400,000 ounce a year to buy more production, or a development project? They've obviously got mine building skills, or to buy production or a mine sort of development project.
Yeah, I mean, if I were a shareholder and they had a good balance sheet, right? My question would be, why aren't we doing something with the cash? If we have the balance sheet to do it, let's do it. Let's buy sooner than later because gold's going up from here. It's not going, terribly down. So I think it's just a matter of these companies are mind-numbingly slow at making decisions. And if I were in a CEO chair of a larger gold company right now, I'd be buying everything I could see without going, completely too over my skis levered. There's just, it reminds me like Core, right? So you and I have talked about Core before, CDE. Mitch Krebs got shelled, I remember, in 2015 for acquiring a bunch of stuff. If you remember, he acquired Wharf during that time. He acquired it for $99 million in South Dakota, and everyone gave him a hard time, like trashed his stock into early 16. And in 2016, we bought that stock under $1.50 multiple times, and the thing ran to over $10 in the same year. I mean, there's so much opportunity in this sector. If you look at charts, right, you can say, wow, how did that happen? Well, you got trashed for making those decisions in a tough market like 2015, but you got rewarded quickly in 2016 for making the same decisions. So I think right now the idea is I coach junior CEOs literally every day, Paul, on this. Do not sell cheaply. This is where you want to hold your asset. In fact, again, just using Sonora Gold as an example, I said, why would you even think about, selling the company here at a 30 or 50% premium, which they're not, but they're getting circled, right? And I'm like, don't even take the meeting. It's like at this price, it's too cheap, right? If you want to build it, go into production, then in 2 or 3 years down the road, sure, maybe sell it for a 3 or 4 bagger from here. But like at 9.5 cents US, this is not the place to sell. And that's so true of many juniors. What's cool about the Sonoro team is that they actually have invested $4 million plus of their own money behind this. So they believe they're showing shareholders, hey, we're on your side, right? We see the vision of a longer term hold here. We're not just asking you to hold long term, we're doing it ourselves.
Another company that could fit into that core mining sort of scenario that you painted, John, is B2Gold. Their stock sold off as they reported cost overruns at their Goose mine development in Nunavut in Canada. Just this past week, B2Gold produced the first gold from Goose. And so potentially the bad days are behind it, and that stock could potentially re-rate as people, turn the page, turn the chapter. Okay, the cost overruns are behind us. Now we're looking at, I think, 300,000 ounces or so of gold production per year, and big margins and good cash flow to come.
Yeah, I mean, BTG has a very attractive yield. If Fekola was anywhere other than in Mali, I'd be hand over fist buying the stock, right? I mean, it's just, I have to be careful with leading shareholders into names where I get surprised because I'm human, right? I make mistakes. There's going to be times where I wake up and I'm like, wow, I didn't think that was even possible, right? As I'm sure FNV felt with wasn't it Panama that you and I talked about? I forget the country, but First Quantum, that whole deal. Like, I mean,
probably Panama.
Yeah. Franco-Nevada was like a huge position there. I mean, it was a huge position in a top royalty company, right? So you get surprised all the time in this business, and you have to minimize those surprises for shareholders.
Okay, also in northern Canada, and a M&A candidate, or an increasingly attractive M&A candidate, is Snowline Gold in Yukon, which announced a PEA, a preliminary economic assessment, for its Rogue deposit there, looking at 340,000 ounces a year of production. John, that's a very tasty number. Is that the kind of level of production that you and other people were expecting from the sort of 7 million ounce deposit there?
I can't say that I really looked at it too closely this week, Paul. I've just been like on the road, and I will say that Snowline, has bucked the trend, and that trend from 2021 to 2024 even was, hey, we're putting out great drill results and no one cares. Snowline actually put out the kind of results leading up to this that people did care about, and investors got behind, both retail and institutional. So congratulations to them. Whether or not that's a disappointment from the market, I'd have to look at the stock more closely.
I think one of the key things there, since the discovery, they've done a lot of drilling very, very quickly to get resource estimate and now PEA. They've moved the project along. They've advanced it very, very quickly, which I would say is perhaps one of the keys to maintaining and holding investor interest.
I totally agree. That is important. And, the other thing is, if you don't have news as a smaller company for 2 or 3 months, put out a CEO message or something. There's always ways for you to put out news. I find it very frustrating to hear like the explanations and the why we didn't do this kind of thing. Just do something. It's like I follow an oil and gas company that's very, very tiny, and I have a big position in it. And that CEO writes a message to shareholders every month. And that's a way to drip on investors to keep them in the stock, right?
Now, Snowline's in Yukon. What do you see as the potential challenges there for either Snowline to take the project forward and develop, or another company to come in and undertake a transaction there?
Well, Yukon has had its share of disappointments over the last few years, right? Victoria being the most recent one that comes to memory. Minto on the copper side was a disaster. So, there is that risk jurisdictionally in that part of Canada. However, there's a tremendous amount of history in the Yukon that's positive. So, it's a mixed bag, Paul. Again, this is going back to my comment of a rifle approach. You really have to do your due diligence.
Absolutely. Now, a lot of money's been raised recently, with some companies pulling down or pulling in some very big financings. This past week, Vizsla Silver announced a 100 million US dollars bought deal financing. Now, putting this in context, with Mag Silver, Gato Silver, and Silvercrest Mining all acquired in the past year or so, Vizsla Silver has quickly risen to perhaps be at the top of the silver M&A list for many people. And now it has most of the capital it needs to potentially build a mine at its Panuco project in Sinaloa in Mexico. John, what do you think is the likelihood that Vizsla is going to be that next big silver M&A deal?
Well, I anyone's guess, right? I don't have any information about that. I don't talk to Craig or Michael that much. I did speak with Michael Connard at Beaver Creek 2 years ago. It was he and I on a panel. And I remember the stock was in the 90-cent range. And I bought some after sitting next to him for a half hour because he made a compelling argument. But it's not a huge position for us. And I don't chase anything as a value manager. It ran up from that meeting from 95 cents to $2 pretty darn quickly. And I think there's a lot of things that are going to be on people's radar, Paul, as we move forward here in the silver space. I mean, I follow things like Silver X, which is in Peru. I think you've talked to Jose before. AGXPF. They just announced a $2 million deal with Trafigura. They're going to do probably some other things down the road that'll surprise investors. A stock like that, yes, they have a high cost, right? So your cost, your AISC, your all-in sustaining cost per ounce is high. Let's say I don't know the exact number. Let's say it's $24, $25. So at silver at 30, it's not that compelling of a story, right? Because you're like, well, they're making some money, but not a lot. But now with silver at 36 plus, if we break 37, 30-ish, that's kind of the resistance level for me, 37 to 37.30. When you get above that on a few closes, you're going to get to 40 pretty quickly. And then a stock like that goes crazy because there's so much leverage in the stock to the price of silver. And that's kind of where we're spending our time right now, is on stuff like Triumph Gold that just bought the silver project in Utah, a producer like SilverX that's producing silver right now, albeit at a higher cost, because these things are going to rip in a hot silver market. And I think we're right on the cusp right now. We could break down, right? I mean, technically you could hit 37 to 37.30 and not get through there. And then you're going to go to 35 or lower. But the beautiful thing here, Paul, with silver is that 30 was major resistance for 11 years. We broke through that like butter this year. That was one of our predictions. The other predictions we had were 35 and 37 in the second half. And here we are, right? 35 broke, took a couple times, but it did break. And now that we broke there, we haven't been able to get below there, which is really, really bullish the last few weeks.
It's always good when a top becomes a floor or bottom, doesn't it? I think one of the reasons silver stocks tend to fly when silver moves is because there's, in the grand scheme of things, there's relatively few of them. And with that in mind, looking towards potential M&A, the other deals I just mentioned, those transactions came after the company that was bought got into production. So will Vizsla have to build Panuco first before it gets any M&A interest?
I'm not sure. I mean, like I said, if you look at a long-term chart of silver going back to the early 80s, right, we've only been at $50 an ounce twice. So I think, by next year, we've been saying $50 silver. I mean, silver is our largest holding. So some might think I'm talking my book here, which I'm not, because all last year when you and I interviewed, I said silver wouldn't break 30. And I had every reason to tell people the other side of that, right? We're very methodical in the way we lead investors, Paul, because we believe they'll stay with us and follow us if we're honest with them about the process that's involved. With silver, though, the process is breaking 30, breaking 35, breaking 37-ish, and then going right to 40 and then to 50. If you look at a chart going back to 1980, there's hardly any resistance once we clear this 37.30 level.
Far from you talking your own book, John, David Earthley, one of our other guests here on Digging Deep, he said basically similar things about breaking 35, breaking 37, and then the next stop is 50. Let's turn to copper. Ero Copper achieved commercial production at its Tucumã mine in Brazil. Congratulations there. And now let's talk about Ivanhoe Electric, which issued a pre-feasibility study, a US pre-feasibility study, which qualifies as a feasibility study in Canada for its Santa Cruz copper project in Arizona to produce about 61,000 tons per year of copper cathode from 23 years from 2028, following a 1.24 billion US dollar capital investment. The project will produce about 72,000 tons per annum of copper cathode during its first 15 years. The project has an attractive internal rate of return of 24% post-tax at an 8% discount rate, and a capital intensity of about $20,000 per ton life of mine, or about $17,000 per ton based on the first 15 years of production. John, this project has about average capital intensity, and it underlines the upward cost trend of developing copper projects. This project's only been around for about, I think, 7 or 8 years. So the fact they could potentially be in production in 2028 is a very rapid development time. Kudos there to Ivanhoe Electric. How much of a concern is it for you as an investor, the rising cost of developing copper development projects?
It's not that much of a concern to us because the copper price is moving very quickly. I mean, we broke through $5 a pound again very easily just recently here. Copper's been trading amazingly well. So I think the price of copper based on supply demand imbalances is going to go up and make all-time highs again, like it did earlier this year, within the next few months. And projects like this are going to benefit because, to answer your question, how did it get there? How did it get to this point so fast? Arizona. Arizona is the number one state for copper in the U.S. and it's a good jurisdiction, right? So like, this is what I'm saying. Like, why bother with some place that's going to take 20 years in the middle of nowhere when you can, get behind a stock like this where they're in a great jurisdiction. So I have to take a closer look at Ivanhoe Electric. It's something I owned in the past but don't currently own.
Now we can bring in a critical minerals element to this because the company announced a few weeks ago that it's in line for an $825 million potential loan funding from US Import-Export Bank, US Exim Bank. The availability of cheap sovereign debt could be a really good benefit to the company as it seeks to finance that $1.24 billion capex. And John, I think this underscores the point that the US government, the Trump administration, is concerned about copper, does want more copper. President Trump, of course, a few weeks ago spoke about the need to continue investing in nuclear, which has obviously been good for uranium stocks. But if the US doesn't make the additional investment in nuclear power capacity, surely it's got to upgrade its power grid as well, because that hasn't really seen any investment for 20 years.
Right. And if you ask anyone living in South Africa about power grid issues, it's literally just brownoutville. I mean, I live in Arizona. We're over 100 degrees like every day in the summer here, and we get brownouts much more frequently now than we did in the past. So yes, that is going to happen in our country.
Okay, let's end with a trip to Bizarro World, also in Arizona. Arizona Metals held its annual general meeting on June 18th, at which 3 of its 6 directors did not receive a majority of votes cast for their respective re-elections. Indeed, 64 to 65% of the votes cast were against their re-election. However, the company put out a news release and confirmed that they will graciously continue in their board roles. Although they did not receive the majority of the votes, Pilmer, Arnold, and Rojas all each graciously agreed to continue to act as directors of the company. John, does that mean if you're gracious, you can refuse to be fired by the company's owners?
I missed that story, and I don't know why that would happen. It's a little frustrating because, as a shareholder of many mining companies, you want to have a say, and if you need to affect change, you want the company to, hear you. And so that's an odd one. I had to look at that more closely.
I reached out to the company for comment and didn't get any return there. John, thank you very much for joining us today. Happy July 4th for tomorrow. And of course, if our viewers like what they see, don't forget to hit that subscribe button. John, doing anything nice for July 4th?
Seeing my beautiful daughter and having a little barbecue and trying to get out and enjoy the weather and the air conditioning.
Excellent. Well, I hope you have a great time. And for our US listeners too, have a great day. I'm Paul Harris, and this is Kitco Mining.